Adam, we spoke to you about a month ago. We were talking about retailers paying rent, and we were also looking at your truck stop business. But let's begin with where you see the economy headed right now and what your base case is for your company.
Great. Hi, Vonnie. Thank you for having me on the show again. Yes, as you pointed out, the RMR Group, we're a pretty large, diversified alternative asset manager, and we really do get a good look at what's going on at the broader economy, given the size and breadth of the organization. Our current base case on the economy is that we are planning, and maybe this is a little bit planning for the worst and hoping for the best, but our current base plan is that we are in a recession and we stay in a recession through mid-21. And then starting in the summer of 21, we start to see some real growth in the economy. That's our current base case. That's the plan we're using as a backdrop as we sort of think through the capital needs of our companies for the next few years and what their operations need to be prepared for.
Which is a pretty chilling statement, really, because that gives us a whole year before we even start to see a pickup. Now, I know your business has cash on hand and is in pretty good shape to try and weather the storm, but you do have a lot of challenges, including in your senior living business, which makes up a good portion of your portfolio. Explain to us the existential crisis you see there.
Sure. That's a really good question, Vonnie. What's going on in senior living? Because it really is an existential question around the future of the business. I say in the short term, it's really been remarkable to watch how the employees and staff in that industry, not just the sites we own, but the industry as a whole, has really responded remarkably to the challenge that they've been put in front of. They're put in charge of taking care of our nation's elderly, perhaps the most vulnerable to this virus, and they've really stepped up to the challenge. And I couldn't be prouder of the folks that are working every day to try and take care of those people.
Yep.
In what is a much more challenging and perhaps even dangerous environment. Longer term, there are questions around the future of senior living. I think overall the space or the industry isn't going to disappear, but there are questions around at the end of this pandemic. I think a lot of folks, the industry is going to really sort of look back, and it's going to be, was the person that you had in that home safer being in a community, or would have they been safer staying at home? I think the early read is that they are likely safer to stay in these communities, but the jury is still very much out. And, everyone reads the popular press and how a disproportionate number of folks that have unfortunately died from this pandemic have been elderly folks, and many of them in senior living communities. And so the jury's out. We'll yet to see. I think the early read is that I think people have generally been safer being in these communities, but I think there is really a question long term when we look back upon the crisis. That's the question everyone's going to want to answer. And I'm hopeful that it's going to be good for the industry.
Well, I know that obviously as you map out the future for the company, you're looking at least lower labour costs in certain of these senior living facilities and assisted living facilities that you run. But are you also thinking about potentially changing the business model entirely and changing those facilities?
Sure. Well, for a while, we've been trying to be a little bit out front of this. Before the pandemic even happened, we were trying to be very forward thinking about the future of caring for America's elderly. And there's been a push over the last few years for people staying at home longer and longer before they move into these types of communities. And so with the advent of technology and services being delivered to people's home, it's a lot easier to stay home longer than before you move into these communities. So I think that trend might accelerate as a result of this pandemic. That's something we were very focused on prior to this pandemic, and it's something we're continuing to be focused on. Now, as a result of that, as a business, you try to move your operations from providing services in a community to providing services to people in their homes. That's something we're very focused on in our senior living business and trying to make trying to expand into that to try to address what we see is coming.
Yes.
Now, within the communities themselves, again, we don't think that they're going away, but maybe some of these communities, especially the age-restricted, call it active adult communities, really are just apartments but age-restricted, and/or independent living, which are people that don't have a high acuity. They're doing fairly well. I could see a world where some of those communities turn into general apartment buildings. They move away from catering just to the elderly, and they start catering to the general population.
Adam, you've more than 700 retail tenants. How is rent collection going this month following last month? And do you anticipate that you'll also see a problem there?
Sure. So last month, in total, for the month of April, we collected 45% of the rents from our retail tenants, which in comparison to many of our peers actually looks like a pretty healthy number. So far, as we're in the first 10 days of May, the collection rate is right on top of the collection rate we were experiencing in April. So we are exactly where we were in terms of collections 10 days into May as we were 10 days into April. The only thing that gives me a little bit of pause is in April, we got a lot of inquiries from our tenants that weren't paying about asking for deferrals. And the overwhelming majority of them we worked with. What's been a little bit odd this month is we haven't gotten as many phone calls. And so while the pace of collections is roughly the same, those that haven't yet paid, we haven't heard from a lot of them. And I fear that they may just not be paying this month's rent. Of course, we'll have outreach to them and we'll try to work with them. But that could be a shift in mentality. In April, some of these smaller retailers were calling up the landlord asking to work with us.
Yes.
This month that they're not calling is a bad sign psychologically. Maybe, I hope it doesn't mean people have thrown in the towel. But it's not a good sign. No,
that's for sure. Well, Adam, I do want to ask you about the leading indicator, which is the truck stops and fuel sales. You control a lot of the supply chain in terms of where trucks stop along the way across the United States. How's April looking there?
Yeah, sure. As we've talked about in the past, our truck stops are really doing a fantastic job. The folks there, that business has been deemed an essential service by the federal government and almost all state governments. And so they've been up and running for the last 2 months in providing services which are vital to keeping goods moving around the country. As we saw in March, volumes were a little bit elevated. Then they sort of pulled back, and fuel volumes were down a little bit in April. They have started to pick up again a little bit here as we get into May. It's still a little unclear what's really driving that. That could be, 10 days doesn't make a trend necessarily, but it could be us picking up a little bit of market share. But it could also be that, the economy is doing a little better in May than it was in April. And that would tie into the fact that there are parts of the U.S. that are starting to open up. And so that would make sense that you would start to see a little bit of modest increase in fuel volumes, which would indicate a modest increase in goods moving around the country between May and April.